I'm using these three growth ETFs to retire. Now, I know I talk primarily about dividends, but in this video, we're going to cover three of my favorite growth ETFs, including a dividend growth ETF that is not SCHD. It actually outperforms SCHD, which I am very happy about, but we'll get into those details later. All that being said, if you are interested in dividends, in stocks, in ETFs, you are in the right place. Don't forget to like the video and to subscribe. We're going to cover a lot of information, so stay focused and let's jump into it. Now, one key to me retiring a millionaire is, of course, going to be the S&P 500. We have ticker SPLG, which is the ETF that I really am interested in buying. I don't hold this one yet, as you guys know if you watched my last video, but I did hear from a comment that SPLG is basically the same thing as VU, except it has a lower expense ratio of 0.02% to VU's 0.03%. So I may have to move that money around. It's got $84.5 million in assets under management, or AUM, and it's been very, very consistent. The chart of this compared to VOO, they're almost identical, but that gross expense ratio is a pretty big deal, even though all in all, it's not a huge amount of money difference, I should say. The key features of SPLG is it's the S&P 500 portfolio. It seeks to provide investment results that, before fees and expenses, correspond generally to the total return performance of the S&P 500 index. Low-cost ETF that seeks to offer precise, comprehensive exposure to the U.S. large-cap market. Now, I like the S&P 500. It might be a little old-fashioned. I am a bigger fan of the NASDAQ because I think that we are in a tech revolution, and we will be for, I don't even know how long, for a long time, in my opinion. The index represents approximately 80% of the US market, one of the low-cost SPDR portfolio ETFs. It is, that is insanely low cost. It's amazing that they do it for that cheap, but it's a suite of portfolio building blocks designed to provide broad, diversified exposure to core asset classes. I do like having a bit of exposure in each indice, in each sector even, but it really depends on where I think things are going. For instance, right now, I think that cybersecurity and AI are going to continue to rally, and there are other indices I'm not so interested in. Whether or not they do well is great, but I am focusing my portfolio on these indices that I think will do the best, and these, I should say, portfolios that I think will do the best. Ones covering cybersecurity, AI, and tech, of course. So there's tons of good info on here. I'm not going to dive too far into it. SPLG, let me know what you guys think. One key factor is the 3 to 5 year EPS growth is up. It's 11.52%, which is amazing. 504 holdings, price to earnings ratio $24, 24.33, not dollars, 24.33. Price to book ratio, weighted average market cap. A lot of these good details in here for those that really want to dive way in. I'm not going to do it just for this video. Of course, has a little bit of a yield as well, but not a big factor when it comes to this ETF. I just like it because it's growth, and there's not much else to say. These growth ETFs, in comparison to a lot of the dividend-focused ones that I talk about, they're relatively simple. You see how they've been performing, you see what they hold, and boom, there you go. But I do want to compare this to VOO and show you guys just what I mean. VOO does come out very slightly on top. We have a total return for SPLG of 641.88% versus 642.47%. Not even a full percent difference. And I think that main factor that is going to fix that is that expense ratio being cheaper for SPLG. They are both phenomenal funds. It's two of the best. The S&P 500 has just been rocking it lately. I also hold SPY. Maybe I should move that around. I'm not sure. I'm a little bit more weighted in SPY right now than I'd want to be. I want to be heavier in the NASDAQ, but I do get a little nervous as we've had talks of a pullback and a correction, which who knows? I can't predict the market, but it does keep me a little bit on edge. So I am keeping some cash, but if we were to see a drop, I would immediately start dollar cost averaging SPLG, VOO, QQQM, and a couple other funds that I really, really like. But let's jump into our next fund. I have made a bunch of content on QQQ before, but QQQM is now what I hold because it's just better for my strategy where I'm buying and holding for the long term. QQQ does have some benefits if you're day trading, if you're writing options, but QQQM for me is perfect. Now, it has outperformed the S&P 500 pretty consistently, and it's just solid. It really just is. This is becoming a very large portion of my portfolio, and I am happy with that, but it's getting a little overweighted, so I might have to move some funds around. But I've been very impressed with it. I think it's very solid, and again, it lines up exactly with what I'm looking to invest in. It's higher tech, a little bit higher risk, but not bad in my opinion. So we can see the performance Well, I guess we'll go over all the data first. If we go to the overview, you can see there's the yield, which is very low and almost insignificant. There's tons of good data on here. Again, price to earnings. I want to find that exact expense ratio, 0.15. It is more expensive than the S&P 500 fees, but has had a better performance. So I'm okay with it. Plus, compared to some of those like QQQI, a 0.7% expense ratio, it's not bad. Now, the performance of both the NASDAQ 100, this is the dark blue. We have the composite total return of the NASDAQ 100 in the light blue. Then we have the fund market price and the fund NAV. So we're really looking at this green bar primarily. And they're all pretty similar, which I like. I like that it's tracking it, and I like that I don't have to hold these 100 individual companies on my own, and that they will actually rebalance it for me. It's just a better way of investing for those that are lazy like myself. And I say that I'm lazy. I'm not really lazy, but I don't want to be picking and going through and doing all this day trading or trading every single week. If I have my ideal week is that I don't have to buy any stocks. I don't have to buy, I don't have to sell. I let my stuff sit, I let it grow, I let it pay me dividends. But of course, I do have to reinvest those dividends manually. So I always do some buying, at least at the end of every month. But all in all, QQQM for the long term seems like a no-brainer to me. If you think there are better funds out there over QQQM, let me know. I'm genuinely super curious. And as you can see with SPLG, your guys' comments educate me significantly. So I do really, really appreciate it. And now we're going to jump into our dividend growth fund, which is better than SCHD and provides some amazing total returns. A fund that outperforms SCHD, FDVV, the Fidelity High Dividend ETF. Now, it holds a lot of stuff that we're going to want to talk about, which we will in just a moment, but it's got about a 3% yield. Now, my thing with these high dividend ETFs is that dividend growth or compound annual growth rate, CAGR, is very, very important. We'll look at the dividend history of FDVV in just a moment before we compare it to SCHD. But I like having a little exposure to this. I usually only keep one high dividend ETF in my portfolio, and I have a ton of income ETFs, but I don't like having too much money spread between these because I also like to pick and choose my dividend stocks. Sometimes that can overlap, but I'm a little bit of a higher risk investor. And for me, like SCHD has just been underperforming. FDVV has done a lot better, though, I will say. We can see the calendar returns market price. It was up 13% and then down 1% in 2018. 2019 was up 24%. 2020 up 3%. Not great. 2021 up 29%, and so on and so forth. Of course, that expense ratio that we talked about, 0.16, not terrible. Could be a lot worse. But check this out right here. We have the hypothetical growth of 10K invested in 2016. So in September of 2016 till June of this year, if you had invested 10K, your 10K would be worth $28,266 today, which is quite amazing. Now, scrolling down, we can see the holdings. We have the top 10 holdings: NVIDIA, Microsoft, Apple, JP Morgan, Broadcom, yada, yada, yada. Total balance percentages. We have sector diversification, which is nice. Of course, information tech being high on this one. I'm very overexposed to tech, and I know that, but I'm okay with it. We have asset allocation, all these good details that I say are important to dive into if you are looking to buy into this fund. I'm not going to cover it completely because I don't want the video to go too long, and we have more to talk about, including that CAGR. Using Seeking Alpha, we can see 3% yield, annual payout is $1.65, and a 5-year growth rate of 7.63%, which is amazing. This is for the dividend as well, not just growth. That's including the dividend. And look at these dividends. I mean, it's very, very solid. Over time, we've seen this thing pay out 27 cents, jumping up. It does pay quarterly. I wish these would pay monthly. I think they would be more popular, but then the dividends would be significantly smaller. So would it really matter? It all depends on the audience. But we've seen some good dividends in the last couple of quarters, and it's just consistent. You don't really have to worry about this thing paying you. You have exactly what a lot of people who are retiring want, which is consistency and little worry. No NAV erosion with these things, of course. Now, one thing I will say is I don't hold a ton of these because of the fact that I don't think I'll be able to ever retire on just one of these funds. Same thing with SCHD. You'd have to have millions to retire on it, and I don't want to have millions to retire on in just one fund. I would like to spread it out a little more, but that's where I do think income investing can be a great component. We go to dividend growth. We can see the growth over time has been very, very solid. We see $1, $1.09. It jumped up. It did pay a little bit less this last year than the year prior, but our compound annual growth rate is pretty good. This is what's really important, and they just changed up how they're doing this. Here it is. Compound annual growth rate 3-year 9.35%, meaning in the last 3 years, it's grown a bit more than the accumulation of the 5 years, including those 3. That's a terrible way of explaining it. So the 5-year growth rate showcases that those 2 years that were included in the 5, not in the 3, were lower dividend, that the years we've seen recently had higher dividends. That's a better way of putting it. But dividend yield is a B- at 3%. I mean, if this thing was a 5%, I would be buying it left and right. And the dividend growth rate of the growth rate trailing 12 months of 16.01 is solid. But the real question is, how does it stack up to SCHD? Let's take a look. One thing that's very interesting, very, very interesting, and I'm curious what you guys think. SCHD, since the inception of both of these funds, because the strip calculator is pulling all the data available for both. So if SCHD is older, it will only pull the time in which FDVV was also trading. What we can see is SCHD underperforms. Total return is 166.48% in the last 9 years for SCHD. That significantly underperforms the growth ETFs as well. FDVV in that same time period is up 197.18%, closer to those growth ETFs, and your compounding, because this is with dividends reinvested. The numbers with dividends not reinvested are vastly different. And that's the thing is I use my investments now to grow. I want those dividends to pay me more and more and to get me more shares of FDVV, of QQQM. So it is important to me to factor in that dividend reinvestment. But average annual total return for SCHD is 11.54%. For FDVV, it's 12.9%. And one thing that's key here is this chart showcases that SCHD was on top significantly during this 9-year time span. Only until about a year ago did FDVV start really taking over and outperforming. And I don't know why that is. I wonder if there was a switch up that happened with either of these funds. Let me know if you guys know in the comments. If you know how I invest with these, I set them and forget them. I don't even really pay attention to a lot of the news on these because I'm more invested in the high income space. It's what I talk about very often. But I mean, there's so much going on. Was there something that changed over this last couple of months that I need to talk about? Let me know what you guys think, and I hope you did enjoy this video. If you found it entertaining, don't forget to like and subscribe, and to check out these videos popping up right now, including my full portfolio and everything that I own in the stock market. Thank you so much. Hope to see you in the next video.